Yeah, good evening, everyone. Uh, Thanks for coming to the joining this meeting. Originally, Raju sir was also supposed to join this meeting, but at the last moment he had something come up, some commitment due to which he hasn't been able to join. But we have a rest of the Gift City team here, uh, the entire Gift City team. So I am Nirmal Bari. I am the principal officer and director over here. For PPFAS alternate asset managers. Prior to, I've been with PPFAS for close to a year, and before this, I was with uh, Noama for 2 years, and before that with Samiksha Capital for 6.5 years. Overall, 11, 12-year experience in Indian markets first. And I've done my MBA from MDI Gurgaon. I'll pass it on to Akshay, who's the fund manager over here, to
Sure.
introduce himself.
Hi everyone, good afternoon. So I'm Akshay Falgunia. I'm a chartered accountant, and basically I have 8.5 years of experience into equity. So I've started working with PPFAS since February 2025. Before this, I worked with various sell side and buy side firms. I'll just pass it on to Purvesh.
Yeah, hi, this is Purvesh Pandit. I'm a company secretary and compliance officer of PPFAS Alternate Asset Managers IFSC Private Limited. I joined this organization in December 2024, prior to which I worked in various listed as well as unlisted companies and spaces, and also in service industry, including my role in Orbis as well as IDBI. I'll pass it on to Prerna.
Hello everyone, Prerna this side. My full name is Prerna Jagdish Chanda, and currently I'm working as manager in operations and dealing. Currently, I handle client onboardings and the client-related queries and operation-related parts. Prior to joining PPFAS Alternate Asset Managers, I was with Unify Investment Managers, and prior to that, I was with CAMS. So I have a total experience of 2 years. Full experience is in AIF field and PMS. Currently, we have PMS. So currently, I am in the field of PMS and AIF at Gift City.
So we'll take you to the presentation to explain what this entity does and its offering. So to start with, the journey of PPFS, a lot of you would already be dealing with PPFS for a very long period of time, so you would be well conversant with this journey. So originally, PPFS group was established in 1979 by Mr. Parag. In 1996 is when we got the PMS license. We were amongst the first few in domestic market to get a PMS license then. And in 2012 is when the PPFS mutual fund was set up. And since then, they've launched 6 schemes. And in 2024, PPFS Wealth Management Division was set up. The Gift City company was set up in November 24, but we got our license to operate in 2025. And yeah, so in terms of, I don't need to introduce this two gentlemen here, Neil sir and Raju sir. So, but Neil sir is the chairman and CEO of the group entity, the parent entity, as well as the mutual fund, and Raju sir is the CIO. Rajiv sir also sits on the board of PPFS Gift City. So in terms of group structure, Parag Financial Advisory Services Limited is the parent entity and sponsor for the asset management company. The asset management company is where the mutual fund business lies. Our company is a wholly owned subsidiary of Parag Financial Advisory Services, the PPFS Alternate Asset Managers IFSC. It was set up in Gift City itself and intends to launch all products related to gift. So if you look at the timelines, November 24 was when this company was formed. April 25 is when we received our FME retail license. Now the FME retail license in gift is the broadest category of license. we are allowed to launch all categories of AIF, Cat 1, 2, 3 AIFs, as well as we can do PMS, as well as we can do retail funds. Retail funds are a relatively newer concept in GIFT, and they are the counterpart of what would be a mutual fund in the domestic entity. So in terms of current setup, we have a full-fledged team. We are at present a 4-member team, but we have a few more people joining over the next few days. And this we have already gone through. So we'll look at the product offerings that we have. So the global portfolio management service is already live as a product. So we have discretionary as well as advisory PMS services. This product is targeted towards resident Indian HNI investors. The minimum ticket size is $75,000, and because it is a PMS with segregated holdings and all, the only individuals at present can invest in this. Corporates or HNI, HUFs and all will not be, we will not be able to accept those. At the same time, NRIs will also not be allowed to invest in this scheme. In terms of our outbound offering, we will have the Parikh IFSC Nasdaq 100 fund as well as the S&P 500 fund of fund. Both of them will come out sometime in the next quarter. Both of them are structured as retail funds, and the minimum ticket size will be far lower than what we are offering at present in PMS. It will be in line with what is being offered in the market at present. The outbound active fund is something that we intend to launch later. This would be the fund where we bring in our research capabilities to the table as well as our investment philosophy. So the retail funds being pooled vehicles, their resident individuals will be able to invest through LRS, as well as the rest of the category of investors, corporates, trust, partnership firms, etc. would be able to invest through the OPI route. And we also have inbound retail fund, which is again a feeder fund into the Parikh Flexi Cap fund that we have, and this is targeted towards NRI, foreign individuals, and FIIs. The benefit of this fund is that since the mutual fund, there are no taxation at the mutual fund level. There will be no taxation for NRI or foreign individual at the GIFT City level as well, and there would be no requirement for for the NRI to file taxes in India, to have a PAN card in India, or any of those things. So it becomes a through and through tax-free structure for NRIs as well as foreign individuals. Yeah, I'll pass it on to Akshay now to describe in brief about our why global investing makes sense.
Yeah, so as most of our products are focused on the global investing, let us try and understand why the global investing is important, and what are the benefits of diversifying into the same. So if you see, India accounts for just 5% of the global market cap. So if we see the total world market cap of close to $125 trillion, half of it is constituted by the US. Whereas if you see the Europe and China plus Hong Kong, it contributes next 14 and 17%. But India is just 4% of the pie. So restricting investment just to India, let us miss out the 95% of the pie. Also, through global investment, we get direct exposure to the transformative global themes and globalization of the consumptions. So there are many transformative themes, global themes, where we might be using their products and services in our day-to-day life, but not actually participating in the growth story. So through this global investing, we can get exposure to these kind of companies, kind of missing in India or are very delayed. We can also get exposure to long consumer companies, which are sometimes even 100 years old, but still constantly growing and expanding their business, and many of them through emerging markets. As more and more people increases their income levels in the emerging market, they are poised to buy, to use more and more products of these companies. directly or indirectly. Now, all these names are just for the representation. They may not actually form part of our portfolio. Now, another benefit is the exposure to uncorrelated economies and sector reduces the risk from the country-specific slowdown and policy changes. So this is an illustrative chart which shows how the global diversification not only brings down the concentration risk, but also go beyond and reduce the country-specific risk. So as soon as you start, so if you see in this chart, as soon as you start including more and more global stocks in your portfolio, you start reducing the country specific risk like political, policy related, or country specific slowdowns or environmental, etc. So there has been misconception around that all the markets are correlated in nature. But during last 2 decades, if you see, there have been many instances where Nifty 500, NSE 500 have shown significant drawdowns. But on the other side, MSCI World was resilient and outperformed NSE 500. So just to give an example, from November 2010 to December 2011, NSE 500 was down 32%, but on the other side, MSCI World was up 14%. So there was an outperformance of 46%. Now, of course, there will be some instances where the scenario would have been completely opposite as well. But all we say is through this decoupling of investment, returns get non-correlated. This is again another chart which shows how how markets are uncorrelated in nature, and thereby global diversification can be advantageous. Now, one of the other advantages is the currency diversification. All we know, INR has constantly been depreciating against USD at the rate of 2 to 4% per annum in long run. Investing in dollar is something which provides a natural hedge to the portfolio, and wealth is created in currency other than INR, which ultimately brings down the overall currency risk. One more benefit is when you blend this investment with the developed market, it often offers the lower volatility. So this chart shows that the returns of the NSE 500 from 97 to now is close to 13.5% in INR terms, whereas the mix of NSE 500 and MSCI World is 13% CAGR in INR terms. So return impact, if you see here, is just 70 bps. But if you see on the left-hand side, the volatility reduction, it is huge. So volatility reduction is close to 25%. I'm sorry.
Yeah. So valuation arbitrage, this is something that you would have seen some of these examples even in the Parikh FlexiCap funds investment over a longer period of time. So in India, all the MNC companies that are listed are trade at significantly elevated valuations in terms of price to earnings or any other metric that you may use. While the parent companies, India is a growth market and that may at sometimes justify this valuation, but the parent companies trade at significantly lower valuations. So there can emerge certain scenarios where the parent, if you do a SOTP for the parent company, the India business would be accounting for majority of the valuation there, and rest of the world business you may be getting at throwaway valuations. And in such situations, then it is a smarter move to invest in the parent entity itself and benefit out of India as well as the rest of the world growth. So we'll discuss in brief about the Parag Global Investment Strategy, which is our PMS offering at present. So PMS, as we discussed, is we were amongst the first ones in Indian market to launch a PMS in 1996. We are also amongst the first few in GIFT City to launch a outbound PMS product. This PMS product will be investing primarily in developed markets, US, Europe, developed part of Asia and all. But there are no hard boundaries around where it may invest or what percentage will go into which markets or anything. It is a product which will focus on global companies rather than taking country specific exposures. these are some codes. We'll move to the investment process as well as the investment approach. So when one thing I would like to clarify here is the research team, the research process, the approach, everything remains the same between the gift city entity and the mutual fund. So we will be following the same value investing approach in terms of finding new companies, studying them, building our portfolio and all. Basically, and the other tenet of our investment approach is that we are long-term investors. We believe in partnering with business and not merely purchasing stocks. And this would, when it comes to the gift perspective, this will be even more important because the taxation implication for short-term holdings and churning the portfolio is quite significant. So we will be following long-term investing here as well, investing with longer horizons. In terms of asset allocation, we have the flexibility here of investing 70 to 100% of the total in equities and rest into debt securities, money market instrument. Now, when the valuations are attractive, we are able to find good opportunities. We would want to ideally invest everything in equities, but when that is not the case, we have the flexibility of having cash as well. That is what this slide indicates. The debt securities, money market instruments, etc., will not be Indian liquid funds or Indian securities at all. So this will be US or some other geography. Coming to some key facts about the PMS, as we have already discussed, only resident Indians will be allowed in for the time being in this scheme. The base currency is US is dollars. We are primarily looking at the discretionary offering. In discretionary, all the portfolio decisions will be made by the portfolio manager, as well as all the execution would also be done by us. In terms of investment and redemption, there are no restrictions. They can be processed on all business days. There's no exit load, as well as there's no lock-in available. And this is not a pooled vehicle, so there would be segregation at the client level in terms of holding, and the statements as well as taxation, everything will be at the client level only. So we are using this interactive brokers platform for the same. They'll be acting as a broker as well as custodian for this product. The minimum commitment as per regulatory requirement, this is $75,000. The management fees is at 2% per annum. Of this, there would be a 50% sharing with the distributors. So the distributor commission will come to 1% per annum. The fees will be charged will be computed on daily average AUM basis. And then operating expenses, primarily there would be three different kind of operating expense. One is the broking expense, which would be $1 per transaction. There would be currency translation expense if you are investing in stocks which are not listed on US exchanges in some other currency. Then and third would be the annual audit expense for providing audited financial statements to clients and all. Yeah. In terms of taxation, there are three aspects here. So tax on capital gains, any investment that is not listed in India is considered unlisted and attracts would require a 2-year holding period to be considered long term. So beyond 2 years, it would the long term capital gain of 12.5% plus surcharges, which comes to 14.95%, that comes in. Less than 2 years, whatever the capital gains are, that will be added to the clients, to the investors' income and taxed at that tax slab. For dividend income, there's a 25% withholding tax that is deducted in US. Other markets would have different withholding tax deduction. There is a way to get this offset in India by filing a Form 67. The clients can contact their own tax advisors to get more clarity on this. There is inheritance tax implication in US if the investor passes away, and this is where we suggest that a joint holding would be a preferable mechanism. Other than this, there is TCS when the client transfers money through LRS, which is more than 10 lakhs, then there would be a TCS implication as well.
So I think distribution empanelment process is quite simple. So you just have to go to GIFT PPFAS website. Then in the distributor section, you will find a tab called empanel with us. You have to click here. Then you will straightly be redirected to the distributor expression of interest form. Once you fill up this form, we'll receive all the details. We'll send you the introduction mail with empanelment and onboarding details along with it. You'll also find a distributor empanelment form in the attachments. So you have to fill this up and send it across along with all the necessary documents required.
So we will also have a digital onboarding of distributors, which we are currently working on, and will be live in a few weeks' time. Till then, this physical process will have to be followed. We will also quickly discuss on, since we have this PMS live, and if some of the distributors have PMS clients, then how the same can be onboarded is the distributor can send us a mail with the details of the client. Details is as in basically their email ID. We will send out from our end the disclosure document along with an Excel that is required to be filled. The distributor would be marked in CC on this. So once we are sending this disclosure document, the client can go through it, and either the client or the distributor can fill the required details in the Excel and send it back to us. Once we receive it, we will fill up the agreement as the DPMS agreement, as well as the interactive brokers form, and we will send it back to the client. Again, distributor would be throughout this communication, distributor would be marked in CC on all mails. So the client will have to check the details, sign on the pages that are indicated in the mail, and scan the same and send it back to us. Send the scanned copies on mail only. Once we will verify that and we confirm that everything is in order, then either the client or the distributor can courier the hard copies to us at our GIFT City office. Hard copies in GIFT City, we will attach the required stamp papers and all, and that is the point where we will send out a mail stating that the client has been onboarded. Along with that, we will send out the bank wire transfer instruction form, basis which the client can then approach their bank for transferring money to the required account, and they can share once the amount is transferred, they can share the MT103 form with us, confirming the SWIFT transfer. And once we cite that money in our account, in the virtual account that has been allocated to the client, the money doesn't come into our account. So once we cite that money, we will be able to start deploying the same. I think that is all that we have in terms of presentation. We had a lot of questions coming from distributors. So Prerna will take up those questions and we can answer.
Hello everyone, we had received few questions. So we'll start the question and answers.
Yes.
So first question is to Nirmal regarding FME. What is the difference between the license that PPFAS has applied for product offering under GIFT City and different types of licenses which are available, and the actual difference between all the licenses?
This is a very broad question to be answered in terms of what different kind of licenses and all. I mean, the IFSCA website will provide a lot of information on that, but our license is the FME retail license, which as I described is the broadest license that you can have in a FME category. It allows us to do all kind of fund management related product from GIFT.
Okay, next question is to Akshay. It is regarding products. So how many products are on offer and minimum USD investment for each? What about the taxation in the hands of the investors?
So products we have already discussed in the presentation, and as far as the minimum ticket size and all is concerned, I think we have not yet finalized the exact minimum commitments and all. Once we decide, we'll definitely let you know. And what was the other question on taxation?
Taxation part in the hands of investors.
So in PMS, taxation is charged at the investor level, but for all the funds which we are going to launch, the taxation will be paid at the fund level.
Okay, next question is to Nirmal regarding products. Could you please clarify why non-discretionary PMS services are not being provided?
So when you look at discretionary, non-discretionary, and advisory services, there are two levels of differentiation. One is who takes the decision, and second is who is responsible for execution. So in a discretionary, we as the portfolio manager will take the decision regarding investment, and we will be responsible for doing the execution as well. In a non-discretionary, the client takes decision on investments based on our advice, but we will be involved in, we would be responsible for execution. And the third one is advisory, where based on our advice, the client takes decision, but we are also not responsible for executing, and that the client will have the onus of execution. So the difference between advisory and non-discretionary in Gift City, it's very thin. It's only the execution part which comes into picture. And so in order to not confuse investors and to have clarity on both the offerings, we have only two offerings, discretionary and advisory. So unless the client has a lot of time to spend and also does a lot of research on his own, or has a large enough portfolio to garner advice on that in international securities, the ideal uh, solution for anyone would be the discretionary PMS only.
Next question is how will be the client track his investment, and what is the process of redemption? How will he receive the money and the tax?
Sorry, what how will the client track his
His investments and the redemption.
Yeah, so this I believe this is from a PMS perspective. I'll answer for others as well. So in PMS, since we are using the interactive broker platform, we will the clients will have a login under their own. The clients will have an interactive brokers login for their own portfolio, so they can see the live portfolio there. They can download reports over there and all. We will also be sharing reports to them on a quarterly basis for their advanced tax filing, as well as for their whatever at the quarter end reports. On an annual basis, we'll be sharing the audited financials with them for their account. This covers, or there is another part?
So this covers. The next question is to Akshay. Could an investor enter in 3-4 tranches to the USD $75,000 minimum?
So under this PMS scheme, there is no such option available. The investment has to happen in one go.
So next few questions are to Nirmal regarding the products. First question is guideline on percentage potential annual operating expenses charge.
Percentage potential and operating expenses. So I think I already discussed the 3 operating expenses during the presentation. Broking expense, audit fees. We are yet to decide on, but it will be negligible as compared to the total volume of the investment. And then any currency conversion charges. There can be some other charges also which can come up at various point of time, which would be ad hoc. But on a net basis, we still don't expect, since the portfolio churn won't be very high in the first year. We still don't expect this expense to be like more than 15-20 basis. The second year onwards, this would be still far lower than that as well.
Next question is, will the client get reports dollar denominated or INR denominated?
Yeah, so again, everything in GIFT would be dollar denominated. So the reports also will be dollar denominated.
Next is, will there be API access for feeds?
Not exactly sure what this indicates, but there would be client would be able to see their live portfolio, but there won't be any API or anything that we would provide.
Next question is, can husband and wife be joint holders? And with respect to same, what is the possibility of inheritance tax triggering?
Husband and wife can be joint holders. In fact, as I said, joint holding is advisable here.
Next question is, how is the valuation done for the global PMS? Is it an audited monthly valuation or a quarterly one?
So before that, on the inheritance tax bit, again, the clients would be better advised to reach out to their tax advisors for the same. So coming to this valuation, all the portfolio investments would be in public markets only. Their share price would be known on a daily basis. The clients would be able to see the value of their portfolio almost real time. So there won't be any separate valuation exercise done for the portfolio as such. Even when we launch the funds and all, those fund investments will also be again completely in the listed domain only. And again, there won't be any valuation requirement there separately.
So next few questions are to Akshay regarding strategy. So first is, what are the research strengths and coverage areas of the GIFT team? Will the AMC research team play an active role in supporting or collaborating with the GIFT City team?
Yeah, so research is actually set across the PPFAS group. So research is common with both GIFT City team and the PPFAS overall research, and we have the overlapping over the investment universe, all the filters and philosophy. Whereas the investment approach and mentality also completely remains same. It's just value investing based approach and everything. But as far as the fund management is concerned, PPFAS GIFT has a separate fund management team, and that is empowered to take all the fund management decisions. The PPFAS mutual funds fund management team will not at all be part of this, of the decision making, the final decision making.
Next is, we would like to understand country targeted. Will you invest in stocks or indexes? How will you take exposure to AI companies?
As discussed in presentation, we'll broadly try to focus in the developed markets, which is US and Europe. And we are not restricting our investments to any geographies. If you find some opportunity or better opportunity in Far East or in the Asian markets as well, then we are open to buy those stocks as well. As far as exposure to AI companies is concerned, I think that is again a part of the strategy. We may take some direct or indirect exposure to the companies, but that is something which is we'll leave it for the strategy and for the portfolio.
Next is, what will be approx return, and what about taxation and payment will be in dollars or INR?
All the payments will be done in dollars only, and taxation we already discussed. In terms of returns, I think as I again said, investment philosophy and approach, everything remains constant across the PPFAS group. So you may assume it by yourself. I mean, we ourselves at PPFAS team don't set targets.
Next is, have you created any model portfolio for PMS?
So model portfolio is something which is actually underway, and it will be disclosed once we release our first fact sheet of the PMS. But all the clients' portfolio will not completely be or exactly similar to the model portfolios, because it depends on the valuation scenarios and the market dynamics as well. So, yeah.
Next is, what is the investment universe for the outbound PMS? Will it include selective exposure to Asian market outside of Japan, such as Taiwan, Korea, and China? Is there any indication of the planned region-wise percentile exposure allocation for the PMS portfolio?
We'll broadly have 20 to 25 stocks in our portfolio. But as I said, we are not restricting it to any of the markets as of now. And we haven't set any percentage or the geography-based percentage on investment universe as of now.
Next is, what will be the minimum market capitalization threshold for a company to be considered for inclusion in the PMS portfolio?
Sure. So I think a lot of our investments would be in the US and the European markets, and those are fairly mature markets, and they have decent size of market capitalization. So as far as liquidity is concerned, I don't think there will be any issue considering the size of our PMS.
Just to add to that, we are not looking to take exposure to very niche, small, economy specific or country specific companies in under this PMS as well as whatever future funds that we launch.
Where will be the cash component to held in the PMS structure? Like in mutual fund, is it either debt instrument or arbitrage?
So we won't be having any exposure to arbitrage, but as far as cash position is concerned, we'll invest in mostly the treasury related ETFs or the short-term high quality bond ETFs.
Okay, thanks. Next question is to Nirmal. How do you manage currency risk in the portfolio? How concentrated is the portfolio? And what's your view on position sizing?
In terms of currency risk, we won't be involving any hedging strategies or anything here. It will be primarily, we would try to keep to the extent possible maximum portion of the portfolio in dollars so that there is no currency risk involved. But even if there is, then there won't be any significant hedging positions. That is one. In terms of the overall position size, we intend to build a 20 to 25 stock portfolio, a fairly concentrated one at that, you can say. But in terms of sector weightage, in terms of company weightage, so the maximum sector weightage can be up to 25% and company weightage can be up to 10%.
So next question is PMS open to invest in Indian companies listed in US like Infosys, ADR?
PMS, while there is no such restriction, the PMS is intended to give global exposure to people. There is no point of taking out money through LRS and then investing in Infosys in US. That people can do in India as well. So we will not. We will be staying away from such. I mean, investing in ADRs of Indian companies. That we may not do that in the PMS.
So next few questions are to Akshay. All the questions are regarding strategy. First is, do you think US has the potential to for investment for a decade?
So as we compare the valuations of the Indian companies with the US markets and making it even for the cost of equity and growth potential, I think we fairly have a good investable universe out there. And also when we invest in the US and the European companies, they are not having all their business or revenues coming from their own geography. They are pretty globalized in terms of consumption, or even more than half of the companies are having half of the revenue coming from outside of their own geography. Just to give you an example, there is a company called Nestle, which is a Switzerland-based company, but in terms of revenue, it just contributes 2% to the local the local revenue is just 2% of the total revenue. So yeah.
Next question is, what is the core investment philosophy of the global investing PMS and how it is different from the FlaxiCap fund global allocation? How do you decide country sector allocation in the global PMS code?
So I think
I think we have answered those questions already, so we can move on.
Next is difference between buying US stock directly via end money or vested versus GIFT City route through AMCs.
Sure. So I think our PMS strategy is something which is an exclusive strategy. It is not a platform from where you can, go and buy securities. It's just to give an analogy, similar to having a new age broker versus a mutual fund.
Next is difference between PMS and outbound.
So PMS, so under PMS, so stocks will be directly held by the investor in their own name, whereas in the funds you will get the units of our retail fund. So that's the difference. I think you want to cover from the strategy, the taxation point of view or something.
Yeah. So from a taxation point of view, in any outbound fund, be it AIF or a retail fund, the taxation is at the fund level. So while it is easier for investors, since the fund deducts all the tax and gives it to the client, gives the money to the client. From a client perspective, the PMS is better off from two perspectives. One is if a client is looking to build a dollar portfolio over a longer period of time, then clients paying tax in India in INR, while the dollar portfolio will continue to grow there. So that is one benefit. The second benefit is that your LRS limit doesn't get impacted in paying taxes and all of those.
Next question is to Nirmal. How will be the reporting and tax returns be done?
So the reportings in the PMS we will be providing annual as well as quarterly reports, as well as whatever whenever the clients require reports for filing taxes and all that we will be providing. In terms of how will the PMS be reported in PMS holdings be reported in the tax filings of the client, the clients will have to fill a Schedule FA while filing taxes. In terms of all the funds that will come in after this, since GIFT City funds are not required to be classified under Schedule FA, so there won't be any separate reporting for the same.
Next question is what will be the STCG and NTCG taxation for the outbound fund?
For the outbound fund, we have already covered this as a part of the presentation. The only thing that is different is that the taxation would be at the fund level. So how does it get recorded from the client and all that you'll have further information on the same once once we launch the funds.
Next question is, will the client attract US inheritance tax?
Again, we have covered the same.
Next few questions are regarding compliance. I'll just ask these questions to Purvesh. So first question is, what if today client is RI while investing and becomes NRI on a later stage?
So after becoming NRI, the client can continue to hold their portfolio, but any fresh new onboarding in any product has to be fresh under a separate category as NRI.
Next question is, how will the GIFT City investment treated if the investor changes the status? It covers same NRI to RI.
So here it changes the thing significantly, because once the investor becomes a resident Indian individual, then its investment into Indian market via GIFT City route gets considered as round tripping. So we'll advise client to fully redeem their units prior change of the status.
So just to clarify the first question, RI to NRI is relevant for PMS as well as outbound funds, and the NRI to RI question is relevant only for the inbound fund.
Next question is, when repatriating back, does client have option to choose which bank to use for repatriation of money?
Yeah, clients can choose generally a different bank account for taking their money back or for redemption purposes. But for safeguarding against forgery and such other instances, we generally provide cooling off period of 20 to 30 days prior such change of bank account, bank details for repatriation, and the final redemption or repatriation to take place.
Next question is partial redemption allowed from PMS? How much minimum redemption allowed?
Yes, partial redemption is allowed in PMS, provided the minimum investment size does not go below the regulatory threshold, which is in our case, it's a 75,000 US dollar. And second part of the question was?
That's
minimum.
So
Partial.
there is no requirement for any minimum redemption size, but yeah, any redemption should not result into investment going below the minimum threshold of $75,000.
Are there limits on investing through GIFT City route? Are there limits linked to the LRS?
So yeah, I think the question is related to limits related to resident Indian individuals investing through GIFT City route outside India. Yes, the limits will be related to LRS, which is at present to like $50,000 per person.
Next is, do investors need to transfer their funds through LRS? What is the procedure for such remittances?
Nirmal, you want to take this?
So
Do investors need to transfer their funds through LRS? What is the procedure for such remittances?
yeah, we have covered this already, but any investor will need to approach their bank and will need to fill up a form A2, which various banks have in various formats and all. That's the
Next few set of question is to Nirmal. First question is, online KYC possible? Yes.
online KYC. There are two parts to it, whether online KYC is possible for distributors or not, and second is for investors. So for onboarding of distributors, I already discussed, we have this process. For investors, domestic investors, there is an Aadhaar based e-sign which is acceptable in GIFT. So online process would be possible there, and whenever we launch this funds, we would also have a online process for onboarding clients there. For foreign clients, there is no Aadhaar card that they hold, or there is no Aadhaar based e-sign. So in those cases, then there is the requirement is to have a physical process where the documents will. I mean, the digital would be the journey would be digital. The entire process would be online, but there would be a requirement for the physically wet ink signed documents to be couriered to GIFT City.
Next is ARN card or any exam compulsory for selling gift products?
So as Purvesh discussed, there is no exam compulsory. ARN card as an internal process, we at present have a requirement that the distributors that we are onboarding should have ARN, a valid ARN.
Next is, what will be the frequency of commission payouts and in which currency will it be paid?
So the frequency of commission payout would be on a quarterly basis. For distributors who are registered in GIFT City, they would have dollar denominated accounts, and so that the payout will have to happen in dollars. For others, the payout can happen in rupees.
Next is, any separate empanelment required for distribution of this product?
Yeah, as Akshay already described, there is a separate empanelment process.
How will the distribution structure work here?
This is also.
I think we already discussed this. I can see a few hands raised, so maybe we can unmute one by one, unmute them one by one, and then we can see.
So, Anish, can you help us doing the same?
Clicker. Hello, Mike.
Yeah.
Hi, am I audible?
Yes.
Yeah. So just want to know when is the probable time for retail outbound as well as retail inbound side of offerings?
So I think I said it in, this in the presentation. Sometime during the next quarter, the retail outbound passive funds that we have discussed, we will be launching that. The retail inbound will also be around similar time frame. The active retail outbound fund that we are planning will be a few months down the line. It will be at least 9 months down the line.
Okay, thank you.
Hi, this is Madhur Gundecha. Can I ask the question?
Sure.
So actually, I'm an RIA. I think the whole discussion was more on the distribution model. I just want to understand for RIA, how does it work?
So instead of an ARN number, you would have a RIA number, and we would be able to onboard. Uh, there are two ways that this can work. One is if a RIA is coming in as a bringing in clients under direct model, then that is completely acceptable as well. And if the RIA wants to register as a distributor, then we would be in a position to consider that as well. That would need some internal approvals, but we can check that as well.
So you have a direct model, right? Then?
Yeah, we do have a direct model. So if you go to for every product, there would be a direct as well as a distributor model. If you go to our website, you will be able to find the presentation for direct clients as well.
So, thank you.
So where can we get this empanelment related information? Will you be able to send us a mail or a presentation?
So the empanelment process, as we described, it's pretty simple. If you once you go to our website on the distributor tab and click on the empanel with us and fill up your basic details there, we will send you the empanelment form. You can fill up that form, sign it, and along with the basic documents that are required, Aadhaar, PAN, and your bank account proof, as well as your ARN. Along with those documents, you can send the scan copy to us. We will confirm, and then you can send us the physical copy. That is the process of empanelment. So we will also probably in a few days' time we will put this as a flowchart in the on the website so that you will have further clarity on this.
What is the management fee for the direct model?
In PMS, it is 1%.
Start from 1 to 3. Think
Can
me,
I
you
ask my
can
question?
go ahead with the question.
Yeah, please.
Yeah. So can you little bit elaborate on the research process? Because as far as
Sorry, we lost you.
can you hear me now?
Yeah.
Yeah. So my question was related to the research process you will have in terms of the research team. Because for domestic funds, you have a great team, but now it becomes a completely different ballgame. And your existing mutual fund team may not be concentrated to that extent for global equity. So can you little bit elaborate on how you are going to really research on the global stocks?
So as we discussed, the research team and the research resources remain common between a mutual fund and this entity. And see, the domestic team also has, though we are not actively investing from the mutual fund side in global equities, because of this RBI regulation, RBI capping. We have some global exposure, and beyond that, we also have a very active maintenance, very active coverage on around 200-250 global companies. So we would be able to benefit, the GIFT City entity would be able to benefit from that research for sure.
Okay.
How many analysts are tracking these 200 to 250 companies?
There is a entire team of analysts at the mutual fund level, plus Akshay and I are also part of the same research team.
So that will be like the domestic and international stocks combined,
Yes,
right?
yes,
Yes.
yes.
Any number that you can share?
In terms of number of team members,
Yes.
in terms of number of team members, there are
I think we'll
about
have 12 to 15 people team.
yeah, and that
12
is
to 15
expanding.
people too. Tracking 200 only international stocks, 200 international stocks is what you're saying.
So that can be a combination of two things. So we have soft coverage on some companies, as well as we'll have the active coverage on some companies.
Okay, no, the 200 250 number that you mentioned, the 200 to 250 number of stocks, that was only international stocks or domestic stocks combined?
So that is international stocks. So see,
That
what
is
happens is people would cover some company in detail. They would give a presentation, and if it is not an investable idea, then it goes into soft coverage for a long period of time. Like, and analysts would not be supposed to spend a lot of time spending working on a coverage, a soft coverage company. But when it whenever that idea becomes interesting, we can quickly ramp up. So this coverage has been built over a very long period of time, because the mutual fund is not a 9-month-old thing. The mutual fund has been there for 12 years. We have been building coverage, and whatever number of 12 to 15, that is just the number of analysts. There are 5 fund managers there. This coverage has been built since even before the mutual fund started. There was a inclination towards global investing. So this is at least 15 years of coverage that you are looking at.
Okay, so like just wanted to get an idea of what is the active coverage that per analyst has. That's the intention of the question.
Okay. So let me
Second
expand
thing-
this question a bit. When you look at sell-side analysts in India or globally, those sell-side analysts need to be very focused on a few small number of companies that they are working on, and generally the coverage there tends to be small. So you won't find sell-side analysts covering more than 25 companies or so. While on the buy side, since there is a lot of support that people get from sell-side analysts, as well as from a lot of associates, as well as interns who keep coming in, the number of coverage companies can be very, very high. It can be 35 plus companies also. So some of the team members that we have had even 100 companies under coverage, domestic plus global combined. So when you look at this 15 team of 15 analysts and 5 fund managers, a total of 20 people covering 200 companies, that is 10 companies per head. That's not very significant. And of that, hardly a few, 3 or 4 or 5 would be hard coverage, maybe less than that. So
Okay.
it's
Thanks for the
quite
clarification.
adequate.
Yeah.
Yeah.
Right. Thanks for the clarification.
Yeah, good evening. This is Ashutosh.
Yeah.
Am I audible?
Yes.
Yes.
Yeah. So 2-3 questions from my side. Out of the 3 products which you have discussed, which are open for US and Canadian NRIs?
So at present, only the inbound fund is there, which is open for NRIs per se. But even within that, at present, when we have not launched it, we'll be launching it in next quarter as discussed. But at the point of launch, we have no intention of having it open for US and Canada investors
As of now.
as of now. So at some later point of time, maybe there would be a separate, maybe it might be allowed, or we may have some other thing. But right now, there's no offering for US and Canada investors.
And for empanelment of private limited company, even for that as well, the process is online, or is it offline process?
So at present, the entire process is offline. When we go to an online process, except for that initial expression of interest, which you will be able to fill online, the rest of the process is offline only. When we go to an online, then for companies, it will have to be offline. So if you look at mutual funds, most of them also have an offline process for companies. Right? So that will continue to be offline.
I was asking about empanelment as for distribution of these products.
Yeah. I'm talking about the same. So empanelment for distribution, if it is an individual, see, at present, everything is offline. The form will have to be filled offline, and it will have to be couriered to give. When we move to a online plus offline kind of thing, even in that case, the individual distributors would be able to complete the entire journey online. For non-individual distributors, it will have to be an offline journey only.
Okay, for
non-individual, as in for companies specifically.
Okay.
We will
Alright.
see part of the journey can be digital, but the physical signing may still be required there.
All right, fine. Thank you.
How
I'm
many
sorry, I
joint
missed
account
this.
holders can we have?
In the PMS structure at present, there can be only 2 joint account holders.
Thank you.
Non-individual investor cannot be investing in PMS, right?
No.
Okay. And what about the active funds, the outbound active fund that you're proposing to launch? Can the non-individual investor be an investor in that one?
Yes,
Okay.
they will be allowed. As I discussed, the OPI route opens up for funds. The OPI cannot be done in a PMS. So that is
PMS.
where non-individuals can come in the funds that we launch.
Okay. Yes, thank you.
Hi, this is Ajita. I had a question on when is PPFAS planning to launch the AIF fund? Is it sometime soon?
So we don't have a AIF in pipeline.
Okay.
Since we are focusing on launching retail funds, that retail funds have all the benefits that a AIF fund has. Plus, in addition to that, there is no restriction on the total number of investors, as well as the ticket sizes can also be lower. So there's no point launching a AIF fund when we are launching retail funds for the same.
And on the PMS product, will there be ETFs as well?
So initially,
Sorry.
so the idea is to invest in direct equities to the extent possible. Maybe initially there might be some ETF exposure, or even in the interim, if we want to take some specific country exposure or something, then that can be in the form of ETFs. But the idea is to have direct equity exposure in that. Akshay will add it. Yes.
Yeah, so if we want to have some cash position or something, then only we'll have ETFs in our holding. But I mean, we intend to have the direct stocks in our portfolio.
Sounds good. And even in the retail outbound, it would be mostly direct equity stocks, right?
So retail outbound, there are 2 products. One is the first 2 would be fund of fund, S&P 500 and Nasdaq 100, which won't be direct equities. There we would be investing in some ETFs or UCITS linked to those S&P 500 and Nasdaq. The third fund will be an active fund, and at present we have not exactly, we are not in a position to divulge all the details about how that would operate, but it would, there we would be taking exposure to specific equities. Yes.
My question is actually the custodian arrangement is with IB India or IB US?
So the custodian arrangement will be with IBKR US.
IB US, okay. And the investment is going to happen in direct stocks only, right? Not CFDs. It's not that the clients are going to get CFDs credit. Actual stocks are going to get credited, right?
No, it will be direct stocks.
Direct stocks.
Okay, and I had a couple of more questions. So how do you plan to build, see if it is India, the kind of market access that you are going to get as a fund house is different, but at a global scale, right? So how is PPFAS planning to have that kind of a reach, maybe like, the access to the management, how does it work? Can you put some light there?
I think in terms of management comfort and all these companies are pretty matured in nature. So,
exactly.
So the risk of the corporate governance actually goes down when you're going to invest in the US markets or the European markets. However, in terms of opportunities and everything available, I think there are a lot of high efficient ROIC companies or better value valuation, opportunities available out there since the universe is so large.
Right. And any third-party research that you have engaged with?
Yeah. So on the So anyways, we have access to sell-side research on this. We also have access to a few expert networks and everything where if we want to learn in detail about a company and all, we can use those resources.
Yeah.
Hi, Alok here. I think just a couple of questions as such. Number one, accredited investors, is the limit still $75,000 or there's a difference there?
So accredited investors under the GIFT City framework can invest a lower amount, but we are at present not accepting accredited investor, as in people with accredited investor certificate with a lower ticket size. So since we anyways have funds which are going to come up, which will be lower ticket size in nature, from a PMS perspective, it is the focus is only on minimum 75,000 ticket size clients and higher.
Fair enough. Second is from a let's say expenses perspective, how does within GIFT City, how does things like GST, STT, I guess all of those don't apply at all, right? So it's just a pure management fee plus brokerage plus FX and custodian.
Yeah, so there are no GST applicable or STT.
And audit charges. That's
correct. So I mean, ballpark, is it something like a 2.5% is what, or somewhere in that range is what one should expect?
So ballpark, one should expect the first year should can be 2.15 to 2.2% at best. Second year onwards, it will be that 15-20 basis points that we said, because we won't be churning the portfolio as much. The brokerage expense and everything will also go down significantly. So the other expenses part will come down even further.
Yeah. Okay. And just last bit is just on the research side of things. The access that you get to managements or to events. I understand you said you have sell side access and you have expert networks, etc. But just the physical proximity to companies in India versus let's say companies overseas, right? I mean, with respect to things like management interactions, capital markets days. I mean, I've been an analyst for 17 years covering overseas stocks. That proximity not being there, do you see that as a bit of a challenge, and how is that going to be overcome? And how much of your research is going to be primary versus broker inputs? So just those two, and then that's it from.
So I think just from my side, what I want to say is we'll try to, so in terms of filtering and all, we try to have the first and foremost filter is the corporate governance. Now, if the corporate governance and those things are something which is clear, and capital allocation and strategies and everything is clear, then I don't see a requirement of meeting the management as such. And also in the global framework, we also have the services of the expert network. So through that also we try to understand company in detail, and we also try to understand the nuances of the business and all those things.
In terms of having access to management, as in the con calls are still open for everyone to attend. Now, if we are investing in a company which is of let's say the size of Alphabet, for example, or any large company, it's very unlikely. See, even in India, if you are a analyst of any recent size, it's not that you get access to management on an ongoing basis daily. So globally, we would have access to the management through con calls whenever we need them and all, as well as if they are doing a Zoom meet, if the sell side is doing a Zoom meeting with the, or a virtual meeting with the management, we will have access to those. One-on-one management access will not be there for sure. One-on-one management access, there are proxies to that, as we explained, and our filter in terms of having a strong management is very high, and that kind of clears out the need for having like a one-on-one interaction. Wherever
Also,
possible, we'll try to do that, but for very large companies, that may not happen. We know that.
and also in terms of transparency, these companies are better off. And let's say the Sarbanes-Oxley Act in US has made very difficult for these companies to hide any information from investor, any material information from investor, and that makes the corporate governance even much stronger.
Okay, fair enough. Thank you.
Hello. Hello.
Yeah, Lali, we can hear you.
Yeah, very simple question regarding empanelment. There is one, we need to specify the correspondence bank details also. If it's Indian account, do we need to specify that?
No, so if you are selecting an Indian account, then the correspondent bank details will not be required. If you are selecting a US dollar account, there is a rupee denominated account and a US dollar account, if you see in that form. So
Okay.
if you are selecting US dollar denominated account, then you'll have to give the correspondent details for sure.
Fine. So I just need to mention INR and savings bank. That's it.
Yeah. Yes.
Thank you.
I think we have a host of questions. Yeah, there are other questions as well.
So we have a list of questions in the chat box as well. We'll try to cover it quickly.
So US citizens money in FlexiCap India fund, that we already answered, will not be taking it. DTA rules will be followed for NRI FIIs for inbound fund. You want to take that DTA, double taxation avoidance rule. So see, there are no double taxation avoidance treaties between India and GIFT City. GIFT City is a part of India. So whatever the tax benefits that GIFT City enjoys, it is a part of the finance bill or the finance act itself. So I'm not sure what kind of other DTA the question seeks out to. Separate model for RIA, we don't have any separate model for RIA at present. The RIA can choose whether they want to register as distributor or whether they want to market our product, our direct product. How is PMS different from investing in international index mutual fund? PMS, we will be taking active positions based on our research and our philosophy. The international index mutual funds or retail funds rather will be trying to track the index only. Considering inbound retail feeder fund, when is it likely to start? As we said, next quarter. The minimum ticket sizes, again, when we closer to launch, we will inform on the minimum ticket sizes. It is a retail fund, so it will definitely not be $150,000 that AIF has. Accredited investors, we are not accepting, as we discussed, accredited investors with less than $75,000 ticket size in the PMS. Akshay Falgunia is the fund manager for the PMS. It's there in the presentation as well. Does retail outbound fund come under LRS? Yes. Any investment in Gift City?
For individuals, yes.
Yeah. For any investment in Gift City for individuals will come under LRS. So it will work as other fund of funds in terms of taxation. So since there would be no churn at the retail fund level for this passive outbound funds that we are launching, there won't be any taxation implication. It is only when the client decides to sell, we will have to do a proportionate sell of selling, and that is where the taxation implication will come in. Total number of stocks, we have already covered this. You are just now offering discretionary PMS. Yes, there we have defined discretionary advisory PMS, and we are right now offering discretionary PMS only. If only in exceptional cases where there is a very large client who already has some foreign investments and wants to come under wants to have professional advice on those, is the advisory model suggested. In advisory, no, advisory is a negotiated fee structure, and the ticket sizes will have to be significantly higher than what we are discussing right now. Can you please share the upcoming product pipeline? See, if you go to our website and go to the product page, you will see the entire product pipeline. In fact, the presentation that we showed here is also already there on the website. For the other products also, as and when we start giving out more information, it will be made live on the website first. So, NRIs at present cannot invest in the PMS. Will distributor fees be paid in INR or USD? I already informed on this. If it is a gift-based distributor, then the fees will have to be paid in USD. For others, there is an option to pay it in INR. PPFAS offers Nasdaq 100, S&P 500 mutual fund scheme like other AMCs. So again, this is not a mutual fund scheme. This is a retail fund. It is gift based. The money will have to come in through LRS. This is not a Nasdaq 100 or S&P 500 fund by the mutual funds like some other mutual funds in India. And anyways, most of the mutual funds in India are not able to invest at present in any of these schemes incrementally. Any local support possible for understanding the product in detail, and also for joint call, if any, can write to us. At present, this is the team that is present on call, which will be able to support in terms of product details and all. You can write to us if there is a big enough group of distributors or investors. We can again schedule a separate call. The custodian arrangement with IBKR, with this we have covered. Will distributor fees be paid in INR, USD covered? US based NRIs, at present US based NRIs are not. Empanelment process is covered. Exactly what parameters do you see? Our investment philosophy is not going to change just because we are going to invest in a global entity. So you have seen, if you have seen PPFAS domestic funds portfolio, domestic mutual funds portfolio, and you've seen the style there, you'll be able to make out on what kind of companies we target. If you have not seen that, we would highly recommend that there is a 15-year history to this philosophy and this mechanism, and you should go and look at that.
And also the global investing is something which is not new to the PPFAS at all. So yeah.
So distributors will be given commission. Distributor commission will be paid out on a quarterly basis. Will inheritance tax trigger for retail funds? Retail funds are pooled vehicles. All the money stays in the GIFT City fund. So there is no inheritance tax there. Has there been portfolio back testing? We will not be able to comment on that. In this portfolio, major allocation will be given to developed markets.
Yes, we intend to have that.
Yes,
we intend to have major allocation to the developed markets.
How do you build access? We have answered this. There is a TCS collection, yes. So if any amount more than 10 lakh rupees in India, there would be a TCS collection by the bank. So we are not involved in that process in any manner. It happens upfront when the person is transferring money, and the bank through which transferring would be then depositing that money and giving a Form 16 or whatever. So impact of churn in the portfolio on the taxation of fund. So impact of churn we have discussed in detail already. Post expense returns will not be able to comment. Please explain the PFIC regulation for PMS and inbound fund. See, PMS is an outbound one. There is no PFIC regulation implication there. For inbound funds, again, we are not taking US and US citizens at present, so there won't be a PFIC implication. Will the AIF limit? No, so there is no AIF. There are retail funds. So retail fund limit will be much lower than the $75,000. So for redemption payouts in other bank, we need to update that. If the redemption payouts are expected to be in some other bank, the bank account needs to be updated first, obviously, and there has to be a cooling period. This is to avoid any cases of fraud or anything. So we will do our own verification on the bank account, everything, and there would be a 30 days cooling period before the redemptions are processed. Please, how can a non-individual empanel with PPFAS? The form remains the same. The process remains the same. In the case, the form, if you look at, there is a separate list of documents that is listed for non-individuals. So you'll have to submit separate documents. We have already discussed the number of stocks and all. Yeah, I think we have covered this question. There are still a few hands, so Apurva, if you can unmute and ask your question. I don't think she has responded. Anirudh? Yeah, please go ahead.
Sorry, we cannot hear you, Anirudh. You are speaking.
You are not audible. You can see that you are speaking probably, but you are not audible to us. Kishore, if you can, maybe Anirudh can come back in the queue.
Can you just, when is the first application for PMS starting from your side?
PMS, we have already started. So far, we have had clients coming through the direct route, but we are accepting clients from the distributor and as well. So once the client distributor is empaneled, they can bring in clients.
Okay. Thank you so very much for that.
Pratik?
Hello. Yeah, I have
Yeah.
two questions. One is how
Yes.
many days does it take to empanel for the distributor? And the second question is domestically AIFs are far more tax efficient as compared to PMS. While we were going through the presentation, you somewhere I think you mentioned that for outbound investments, PMS is more efficient than AIF. So can you quickly, like a couple of points, elaborate on the same?
Yeah, so that is from the point. What was the first question I missed out again?
First question, how much time will they take for the
time
distribution?
distributor onboarding. See, distributor onboarding at present, we are running some backlogs, but once this process is smoothened out, once we get the form within 3 to 5 working days, we'll be able to process. And we expect that ideal timeline to come in at least a week down the line, not right away. So if you are sending it today, please expect a 10-day, 10 working days kind of a timeline to be onboarded, because we are running certain backlog. So secondly, domestically, when you look at the taxation on AIF and PMS, AIFs also pay taxes on every churn. PMS also, the client is responsible for paying tax on every churn. This is I'm comparing Cat 3 AIF versus PMS, and the tax rate for AIF and PMS are exactly the same. So short term is 20% plus surcharges, and long term is 12.5% plus surcharges. And when you come to a global market kind of, and everything is in INR, so it makes zero difference. When you come to a global market kind of thing, one is the short-term tax rate that any AIF would pay. They would conservatively take it at the maximum rate, either 40% or 43% basis what basis new tax regime or old tax regime that they are adopting. Okay, not all clients that are investing may be in that 40 or 43% tax bracket. So whenever there is a short-term churn, a PMS, a client who is in a lower tax bracket will be better off in a PMS versus being in an AIF. That is one. Secondly, from a perspective of client's intention is to build a global dollar denominated portfolio, and the transferring money is in LRS, then basically you are transferring money in LRS in dollar terms, and then at the AIF level, those LRS dollars are being used to pay taxes as well. Whatever the growth that happens in that portfolio, the same LRS dollars are being used to pay tax, while the client would ideally be earning in rupees. So in a PMS, the LRS dollars are safe in terms of whatever growth they are seeing, they'll keep growing at the as in there's no negative implication of tax there. The compounding will continue to happen, and the investor can pay the taxes at in Indian rupees, which is also the currency in which he's earning. So from that perspective, if a client is looking to build a dollar denominated portfolio, then PMS might be slightly better off as compared to AIF. Obviously, AIF, the comfort is that the fund level taxation then takes away the headache from the client of doing any tax as in additional requirements of tax filing or anything. While in a PMS, the advanced tax filing as well as all of those would be on the client.
Okay, yeah, thank you.
Yeah, Naomi. Naomi, you can unmute and ask your question. No, I think if there are no further questions, then we have already overshot our time for this call. We can close the call.
Okay, Akshay. Should I end the event?
Yeah, so
Yeah,
for
thank
any
you,
further
everyone.
queries, you can definitely reach out to us, and you can also glance through our websites. We have all the presentations there. Yeah, thank you all.
Thank you, team.
Thank you. Thank you.
Thank you.
Thank you.